Mark Carney says he wants to help fix Canada's housing crisis. So why is he standing by while billion-dollar corporations scoop up entire neighborhoods before families even get a chance? Do you ever feel like you're playing Monopoly, but someone else already owns most of all the properties? You hustle, you save, you finally get pre-approved, and just when you think you've found the one, poof, it's gone. Why? Because we're not just competing with other families anymore. We are dealing with an entirely new class of buyer. And no, they're not foreign investors. They're not your typical rich boomers either. I'm talking about corporate landlords, massive companies with billions in capital, and they're not just buying condos. They are buying up single-family residential homes and sometimes whole subdivisions, which is a growing trend, especially in Ontario and BC. Guys, I wish I was kidding. Buying up homes like they're stocks, snatched by billion-dollar firms with names that sound like Marvel villains, Starlight Investments. Who even heard of these people? And why are they buying your starter home like it's a crypto token? If you haven't heard of these mega corporate players yet, you will after this video. Here's what we're digging into in this video. Who's really buying up homes in your neighborhood? Why it's not who you think? How corporate landlords operate behind the scenes. And spoiler alert, it's nothing like you do. The tech they use to scan listings, auto bid, and close before you even book a showing on the home. Why they're being accused of price fixing and how this affects your rent. And yes, this is happening right here in Canada, quietly and fast. But before we dive in, please like, share, and subscribe because this is the kind of content that might actually shift the conversation. It wasn't always like this. Before 2008, most rental properties were owned by local investors. Mom and pop landlords, they had one or two homes, they fixed them up, rented them out, maybe passed them down to their kids. Personal, grounded, small-scale investing. Now, let's zoom out and look at what's changed. In 2011, 69% of Canadian households owned their own home. By 2021, that number dropped to 66.5%. Doesn't sound huge, let's be honest. If that trend continues, the market in 10 years could look unrecognizable. And here's where it gets interesting. The provinces with the highest rate of investor-owned properties, well, Nova Scotia at 31.5%. New Brunswick at 29%, BC at 23.3%, Ontario 20.2%. Now, investors here doesn't necessarily mean corporations. It includes individuals who own more than one property, but the implications, they're still massive. And get this, in Nova Scotia, more than 1 in 20 homes are owned by out-of-province or foreign investors. Bet you didn't know that. In downtown Toronto, the investment property rate is 21.7% compared to 16.3% across the broader GTA. Now here's where things escalate. Between 2018 and 2020, the number of companies owned in Canada owning 100 plus homes surged. In Ontario, it jumped 15% from 300 to 345 companies. In BC, up 21.4%, reaching 85 companies by 2020. At this pace, by the end of 2025, Ontario could see 700 plus corporate landlords, BC nearly triple. These aren't landlords, these are billion-dollar funds. They're buying entire subdivisions and flipping the housing market on its head. And the reason they're moving so fast? AI. Yeah. These companies aren't using Realtor.ca. They're using algorithms to scan every new listing while you're still brushing your teeth. They analyze projected rent, renovation costs, school zones, crime stats, property taxes, everything. Offer submitted before you even booked a showing. Amherst Capital scans up to 500 listings a day. They generate daily bid lists faster than your mortgage broker can even finish their coffee. Still think you're beating them with your spreadsheet? Not a chance. And yes, this is absolutely happening in Canada. In 2021, a Toronto-based company announced it would buy $1 billion worth of single-family homes to rent out. Avenue Core Development is targeting clusters like subdivisions of 50 to 500 homes in strategic Ontario markets like Hamilton, London, Peterborough, St. Catharines, Cambridge, and Kingston. By 2023, Avenue Core Development's goal exploded to a total of 10,000 homes. Let's be clear. They're not building homes. They're not adding to supply. They're removing inventory from the ownership market and turning it into a permanent rental. Some economists say this is no big deal, that these companies are creating rental supply. Cute. But they're not building. They're not developing new land. They're just taking the same homes your family is trying to buy and turning them into rentals for profit. Buying 10,000 apartment units, fine, that's different. Buying 10,000 houses, that's 10,000 opportunities taken off the ownership table permanently. When mom and pop landlords move on, they might sell to families. Corporate owners, they package portfolios and sell to other funds. Properties just pass from one institution to the next. And when it comes to rent, there's a little software called RealPage. You may not know the name, but the biggest landlords in North America do. Oh, they especially do. It uses AI to recommend rent increases and even suggests keeping rents empty to drive up prices on the others. Ridiculous. That's not supply and demand. That's algorithm rent fixing. In the US, the Department of Justice is suing RealPage. In Atlanta alone, it was responsible for renters paying an extra $181 a month. And yes, that software is used here in Canada too. We just don't have the same regulations around AI-driven rent optimization. And now, Canadian landlords are facing class actions too. They've denied using RealPage and the case is still working its way through the courts, but the pressure is building. And it's not just billion-dollar corporations that are buying investments here. It's doctors, lawyers, consultants, small business owners. They're buying homes through corporations to access low tax rates and accelerate savings. So some even buy their primary residence this way. Let's talk productivity for a second here. In 1984, Canada produced 88% of the value per hour worked compared to the US. By 2022, just 71%. Our household debt to income ratio, highest in the G7. We're not building wealth here, guys. We're building mortgages. We're building debt. Every time someone raises a concern, we hear the same line. It's a supply issue. Yeah. But what's the point of more supply if corporations buy it all before families can? That's not creating affordability. That's creating a rental class. And let's end on this. From 1999 to 2019, the net worth of homeowners, it rose from $323,700 to $685,400. Renters from $14,600 to just $24,000. That's the wealth gap baked into housing. From 2011 to 2021, renter households grew by 21.5%. Owner households only 8.4% rise. By 2021, 1/3 of Canadians were renting, and that number is still climbing. The longer we let corporations corner the housing market, the harder it becomes for the average Canadian to ever break in. And the more they control, the bigger piece of the pie they get. The Liberal government last year publicly signaled plans to crack down, stating Canadians shouldn't have to compete against billion-dollar hedge funds when bidding on a home, but haven't enacted a full ban on corporate investors as of yet. Surprise! But if you've stayed with me this far, it means you care. So share this video, talk about it, push back, because we're all still playing Monopoly. And if we don't act soon, they'll own the whole board. Thanks for watching, and I'll see you in the next one.